What's happening, guys? Welcome back to another Sunday Scan. I hope that everyone had a great week, a great weekend. We have lots of things to talk about today. We have the whole China sector trade that we're going to go over. We're going to review a couple of charts, and then later on we're going to bring on Dawson for the main watches section. He has a ton of names on watch, very high quality preparation that should give everyone some ideas for the week ahead. So let's get right into it. The big real trade, or the big theme of the past week, has really been this China trade. And for anyone who's not familiar with what's happening, China announced that they're doing a good amount of stimulus to try to get their economy going and to try to get their stock market going. And we've had some big moves in some of the large caps like BABA and PDD and some of the other ones, and some of the small names as well. But I kind of want to give a little bit of a context around the China trade, and then what I'm looking for as this plays out. So just a little bit of history. So China, they've had problems for the last several years, especially since COVID. They did a complete shutdown of their economy, and China doesn't like to do Western style stimulus. So basically, over the last couple of years, their economy has been really struggling, and the government will only do a little bit of stimulus at a time because they don't want to do the whole giant package like the Fed has done. At least historically, that's kind of been their process around stimulus. And so what we've seen is that it hasn't been working for them over the last couple of years to do these little bits of stimulus. And so what they're doing is they're trying to ramp up those efforts. They've lowered interest rates. They've increased the amount of stimulus that they want going into the economy. They want people buying, stocks in their stock market. They want buybacks happening. So they're really changing their tune from a slow drip of stimulus to we need to get this going because the data was getting worse and worse. Their housing market is at like 2008 levels, like equivalent to the US when it was there. You have manufacturing, numbers dropping. So China was getting a little bit desperate to get something going, especially, in my opinion, as we're heading into an election year or an election cycle in the US. And I think that China wants to be in a good position to be able to negotiate and to be able to figure some things out as that unfolds. So that's a little bit of context around China. And so over the last couple of years, you've had a ton of money really leave that market, not only for the economic reasons, but also for the security reasons. China has the Taiwan issue, and if anything were to happen with that, it could be very similar to a Russia situation where you could have things get delisted, you could have a flood of capital leave the markets again. So there's a lot of risks around China. But all that being said, you had a lot of capital come out of China, and so it was at very bare levels. And so anything positive can spark that capital to flow back in, and it doesn't take much to really cause a big mean reversion with a lot of the China names. So there's a couple of themes that I want to touch on today with this whole sector trade, and the first one is to really zoom out. We've seen very large moves in a ton of the China stocks over the last week. But if you zoom out on a larger time frame, it's really just kind of going back to levels over the past year or 2 years. And so it's not like as overextended as it might seem, where it's really almost just like a mean reversion trade back into a normal range of a struggling market. And so you can see on things like FXI, which is just the large caps in China, yes, it's had a very large move. Yes, it's responded to stimulus, but in reality, it's just going back to levels over the last couple of years. And so, a lot of people have the China names on watch for continuation. A lot of people have them on watch for mean reversion trades. But the first thing that I would just like everyone to keep in mind is to just zoom out and to put these kinds of moves in the context of the last couple of years, because that can help kind of get a better picture of positioning, of capital inflows or outflows, and then maybe how to trade some of these things or what to keep in mind. So let's run through a couple of these names just to see what I'm talking about here. So an example is PDD. This was it used to be a strong performer of the China names, and then recently, a couple of months ago, it had that big gap down after they released earnings. They had problems. They guided down, and there was also some issues with low-cost items getting imported into the US. So there was a bunch of problems that caused this big gap down. So you can see that PDD has had a huge move up since the stimulus announcement, over, about 40% or so off those 90s lows. But really, yes, it's overextended to some regard, but it's really just coming back up to these levels before that news. So it's just something to keep in mind that yes, these have come a long way, but they're just coming back up into prior levels. So, if you have these on watch for a mean reversion trade back down, and I have these on watch as well, you really just want to keep in mind that patience is your friend, and you want to let the positioning get back to a normal range, or even bullish positioning before you have that mean reversion trade. It's good to think about, how do sharp moves in stocks happen? And it's usually when one side, either bulls or bears or supply or demand, when someone's off sides, and then you have a rapid change in supply and demand. So you had very bearish positioning, you had a lot of capital that was already out of the market. And so when you had that positive news, you had capital come back in, and that caused short covering. And it also just any buying was, received well, because it was thin over top, because a lot of the weak hands from the last couple of years have been flushed out. So, yes, you can have very sharp moves back up, but it's really just back into a normalized range. And so what I'll be looking for, and I'll get onto this in the main watches later on, but you really want to wait for the move to exhaust out and for it to feel heavy. And that's going to be the difference between, capital flowing in every day, demand coming back in, and it actually being ready to, unwind a little bit, or at least mean revert back down. Even if it continues higher, in order to get a good mean reversion trade, you need some overextension, you need some bullish positioning, and then you need it to stop going up and some profit taking, and then that can flush it back down. So just something to keep in mind with some of these names in China. The same thing with BABA. Again, huge move off that, the 70 levels. But if you zoom out again, it's just back to levels of the last couple of years. So if you were to see this in a small cap stock, it would be no surprise, and you would be looking left and to areas around here. So it's just something to really bear in mind as these moves play out, that, the first move that we're seeing that looks like an overextension is really just kind of a mean reversion back into a big channel from the last couple of years. So don't exhaust yourself out looking for that mean reversion trade. And then as, capital is flowing in, and as some of the small caps in China are heating up, you can definitely have some good trades on the upside before you have an eventual mean reversion trade back down. The next one I want to cover is XPEV. So this is just like a smaller name in China. Same situation as I've been talking about with the larger names like PDD and BABA. XPEV. These are some good names to keep on watch, both for the upside potential, but then also when the sector does correct. A lot of these names that have less fundamentals than some of the larger names, they can really go down hard. And you can see if we zoom in to some of these levels, you have a big move from 6 or 7 all the way up to 14. So you're having, 100% moves up here. And so you could have something go from 14 back down to 10, get a 40% mean reversion trade, or it could go up to 20 and then go from 20 to 15. So you can get some big moves. And so these are good to keep on watch, both for the long side, if you're playing sector trends, as long as the headlines are positive, as long as stimulus is flowing in there. But then just keep in mind that these are going back to recent levels. And then we have a lot of issues still to deal with in China. So if the buying stops, if it exhausts out, then that mean reversion trade can be very large. Same thing with NEO, basically the exact same setup as XPEV. And then a couple of other things I want to touch on from the past week was SMCI. And so we had a huge gap down on some news that it had a DOJ probe. And, SMCI has been very headline driven. They delayed their 10K. They had a short report against them. They've been gapping down. They've been moving back up. And so we just had another piece of news drop, and that moved the stock down, significantly. And, in Investors Underground, we had an alert the second it came out. We have these things called tape bursts or volume bursts. And so whenever a huge move happens in a stock very rapidly, it immediately lets the chat know that something's going on with this stock, like within a second or two, and people can zoom in and then they're looking for the headline. And we had Judah drop that headline about the DOJ investigation right after that. And so, as some of these moves are dropping, 50 points, 70 points, or anything like that, you could have some of the options on them go up 70x, 100x. And so it's just really a hugely valuable thing to be in a place where you have the technology to alert you as soon as something happens. So something to keep in mind, having tech on your side while trading. And we'll get into this in the main watches later on for what could happen next. And then a couple of things in the small cap land. You had a big move on Lay's. And then you had the day where basically the options became available trading on it. So this name it had some recent headlines, had some PRs, and then you had basically a big anticipation of it having options being traded on the name. And Nate had this on watch, and there's been a high association between when names get options added to their to the stock and a big mean reversion trade on that day. And so Nate had that on watch and had a beautiful trade off of that, and it faded from 20 down to, I don't know, 14 or 12 or something like that. So kudos to him for, really understanding those trades and to have that on the radar for people. So very nice opportunity there. And then the final one I want to touch on really quickly is MSTR. Big moves in Bitcoin, and partly, as global liquidity increases, as you have some of the China stimulus, as you have rate cuts, a lot of those things are favorable towards risk assets like Bitcoin. You have the US election coming up, so there could be some regulatory uncertainty there, but overall, Bitcoin is starting to climb back up towards that 70 range, and you have things like MSTR, which are the relatively strong names, while some of the other names like Coin and the Bitcoin miners have still struggled. This has really been a proxy for the price of Bitcoin, and MSTR actually has leverage products on it now. So you have things that are trading 1.5x or 2x leverage to MSTR. So all that can really accentuate the moves both up and down. So we'll get into a little bit of this later on too, but we're going to bring on Dawson. He has a ton of watches, so we're going to get into that. But before we do, I want to give the disclaimer that neither Dawson nor I are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. Now let's bring on Dawson. All right, we got Dawson back on this week. Dawson, thank you for joining me for Sunday Scan. How have you been? What's going on?
Doing good. Fairly busy week in the overall markets here with all of the China stuff going wild. Typically, when we can get some sort of macro event that trickles down into small caps, that's when I like to swing the bat hard. And so, beginning of the week, first day or two was a bit choppy for me, and then going into the end of the week, started to pick up and had a nice Friday there into the weekend. So, yeah, a bunch of small caps and stuff on watch, but seems to be hot out there.
Great. Yeah, totally agree. And we're going to get into all of our main watches. But, before that, we got Traders for a Cause coming up in 2 weeks. I know that you're going to be there. I'm going to be there. And I think that we're both really looking forward to, connecting with the community, just hanging out, catching up. And it's just such a fun event that we're looking forward to. So, yeah, I'm pumped to see you there in a couple of weeks.
Of course. Yeah, it was like 2 years ago, I think the first one, 2022, I believe. And I was always scared to get out of my shell before that. Nate kept poking me to get out and start networking a little bit, and now I don't think I'm going to want to miss an event moving forward. It's a highlight of the year every year.
I'm right there with you. All right, great. Well, let's get into some of your main watches for the week. I know that you have a pretty robust list, so you're watching a lot of things, a lot of good ideas. So let's get right into it.
Yeah, long list. Before I get started, got to make sure to wish Stan a happy birthday coming up into next week. But we'll start off here with Cini and Duo. I'd kind of throw these in the same basket. A lot of these will be China names. Looking left, a lot of pop and fails on these daily charts. And we have this recent big volume day here on 9/11 looking left. And then you get a straight up bounce from 30s up into the 120s. And I tend to look back on what I call an intradaily, and try and see where volume profiles traded and key levels from those high volume days. Because the daily chart gives you kind of an idea of where there could be support and resistance, but zooming in, you can see where a lot of the chop and volume was changing hands. So that's where these 1-teens level came from. And then on Friday, a massive shove into it off the open with a lot of exhaustion volume into the highs. And then once it broke down and retested, was a nice failed follow through setup into those 1-teens as well. But this thing still extended. It's up from 30 cents up in the 120s. It closed in the 90s. So I think there's still room here to the downside. If we can get a pop back into this 97 to $1 range, look for prior support to become resistance. I think we get a pullback. Duo, I'd kind of throw in the same basket, given that it's got overhead resistance and not a great history of multi-day runs. It hasn't gone red yet in 2 days, but I do note that the exhaustion day, which typically comes on that day 2 gap up, you get that blow off volume off the open. And this one didn't have that. So when I zoom in on this intradaily, a lot of the volume was still traded around these low ones in this 110 range. So I'd want to see a 110 breakdown and this thing stay red so that I know that there's traders on the wrong side, that I think sellers are going to be there on pops. But if this thing starts to build back above 130, 140, I'm going to stay cautious. I want to see this thing break down. Sini, I'd be a bit more aggressive given that I've got so much supply overhead. Another few more China names. UXIN. This one hurts me to look at. Had a long here in the 230s with risk on 216, and I sold that into 3. So looking at it at 6 now is not fun, but there should still be opportunity on this moving forward. We've got that nearly triple on the daily chart. I typically like to see at least 100% move. So a triple at 200%, that's there for range-wise. And if I zoom in here, we've got this little failed fall through level here off the 520s that lines up right with the prior close. So if this thing can stay red and then look for 480 to build below, I think we could get a first red day set up here for a pullback to the daily 4 EMA. NA is also a China name, a bit on the lighter side volume-wise, but going from 30 cents to 110. This would be one where, I'd throw a few shares on it and not really pay much attention to it. Just kind of let it work if it's pulling back with the rest of the sector. But this wouldn't be a main watch, just more the same chart setup that looks like it's been working. Load was the one from Friday with that exact same chart setup where you get that big multi-day extension, blow off in the morning, and nice first red day capitulation. LX, I really like this one here, going from the 160s up to the 240s. Relative to prior price action, this thing has sped up quite a bit. Volume keeps increasing day after day. So a trigger on this one would be opening range lows or some sort of green to red move. So to the short side, I'm looking for a lot of these China names. We'll have to keep an eye on the sector as a whole, like not looking to force a bias and just slam short off the open. But if all of these start to break down key levels and there's confluence across multiple names, I'll try to lean into those trades. So those are the short watches. And then in terms of long watches, I've got a few here. Jivo has proven now that it can go on a nice multi-day run, holding prior day's close and continues to trend nicely. You get this pullback first red day, lower high, and at this point, I don't know where it's gonna move. If it's gonna break down below 130s, if it's gonna break back above 150s. So at this point, I let it push, pull, consolidate, and choose a direction, and it chose its direction on Friday. So dips are of interest to me towards this 150 as a risk, as a guide, and then looking for that bigger picture 180 breakout for a replay of this move. IMRX isn't really a main watch going into Monday, but given that it's a weekly scan, I think I'm going to keep this one on watch and just mention it here. Basically, if this builds above 330s, I think it could trend higher. And if it breaks below 220s, then I think this thing is dead. But it's that same kind of intradaily price action where you get that front side move, pull. Now it's in that consolidation range. I don't know which way it's going to go. Is it going to do one of those perk candles like Jivo did, or is it going to do one of those slam candles and break below? And then last one on the long watch here is FTCI. It does have this overhead resistance here in the 70s from pre-market with a bit of an increased volume bar there. So I think it's notable. But we did get a perk out of this 58-cent range on Friday, and it held and consolidated above it fairly well. A lot different than its recent days where it would shove into it and fail. So anything on dips and flushes versus prior days lows, I like that for a trend join as well for a move up to 70 cents, 80 cents, something like that. Not a huge trade, but I think it's worth a position and a watch there. So I think that's it. Yeah, a bunch of China names and a few long watches.
Excellent. Yeah. And I think that it's just incredibly helpful to have, a multi-sector approach, both long and short watches. And I know that people, we've had great feedback when you've been on before, and people really appreciate, just having so many options to choose from, because, you might not have 10 names on watch or something like that. And then if, 3 of them resonate with someone, then they can add them to their watch list. And then as the market opens and 2 of them are acting the way that they think that they'll act, then it's just this whole process of narrowing down to, what are setups that make sense? What are setups that make sense to you? What makes sense on that day? And then, working basically just from like a larger picture view down to a smaller. And that's really what the process of, a scan is all about. So those are great watches. And I'll jump into a couple of mine. I also have the China names on watch. And, earlier on, we have talked about some of the themes about China and things like that. But the general idea here is that while you had, basically sentiment change, you had some stimulus, you have China basically trying to prop up their markets, I think, leading into the US elections, so that China has a little bit of negotiating power and some strength as, new policies will get negotiated and worked out. I think that you had this big, kind of squeeze out, or this mean reversion trade back up to levels that, we've seen over the last couple of months. So like a name like PDD, they had, a negative earnings report, and they had some things that were of concern. And so they had this huge gap down, and basically this whole retrace, even though, yes, it is extended, it's really just back up to levels of, a month or two ago. And if you were to think about this as like a small cap name or something, this wouldn't be that crazy of a move. So I think that with a name like this, you really just want to have, some kind of a thesis or bias, but then you need a lot of patience, and you need to put your bias aside until it's ready to play out. So, I'm going to be on watch for a lot of mean reversion with China. And so, after a large move up, I think that we're going to have a retrace back down at some point. But the difference between someone who's waiting for that and someone who's trying to force that is going to be the difference between whether you make money on a thesis like that or not. And so what helps me with situations like this is to always assume that it's going to go a little bit further than you think. And when you are trying to do a mean reversion trade, assume that you're going to be a little bit early and just really wait for that confirmation. So I always go by the look, think, and feel kind of trade thesis. And so you look at a chart, you look for something that's either extended or mean reverting or whatever setup you can see on it. And then you think about, why is it happening? There's a catalyst, there's a fundamental change in some ways. And then you basically have to line that up with key levels. And then it's all about feeling the action. And I'm huge on that, because that is what really can help you get some confirmation. So if you have a name that is gapping up, it's grinding, it's strong every single day, that feel will be like every dip is soaked. There's demand coming in, there's buying happening. And if you're trying to fight that, trying to, play it back down, you're going to get chopped up to the point where you exhaust yourself out, so that when the real trade comes, you don't have anything left because you're too frustrated to do it. So waiting for that feel of, when things gap up and then they just stay heavy and it's acting different and it's acting heavy, it's acting like they're selling, that's when I want to join that. So the look, think, and feel, that's really what's going to help be able to play this when it comes along. And if this is just strong nonstop and we don't get a pullback for a while, then I'm just going to be sitting on my hands waiting for that trade, and I'm not going to force it because the market doesn't have to do what I think it has to do. The market's going to do whatever it's going to do, and it's just my job to recognize that and to join the path of least resistance when that comes on. So PDD, that's going to be a main watch along with some other China names for an eventual mean reversion, but a lot of patience is going to be required on that, and the same thing with BABA. And we actually have next week in China, there's a China national holiday. And so some exchanges there are going to be closed. So these names will still continue to trade on other exchanges, like some of the Hong Kong exchanges and in the US, because these are ADRs. So basically the US equivalents. So they will trade. But what I'm curious to see is that if some of the Chinese markets are closed, if that dampens some of the demand from the recent catalyst. So I'm not sure if that will happen or not. But again, I'm going to be looking and feeling for that action if it does. And then you could have a nice mean reversion trade. And it doesn't mean that the sector is necessarily done, but it does mean that if something ran up, 30, 40%, it could correct by 5 or 10%. And especially for my style, if you're looking at something with like options, either weekly options or something like that with puts, you can have 5 or 10 baggers, that really play out nicely that you can get some nice size on. So I'll be waiting for some good opportunities with that. Tesla, this has been a main watch since the rate cuts, very rate sensitive name. And they actually have Q3 delivery numbers coming up, I think on Wednesday or sometime next week. I don't know if they've officially announced it, but that will be a catalyst. It's run up into that. So a lot of anticipation that numbers are going to be good. And so if numbers are good, then that should continue it and confirm it. But if numbers are bad, then you could have a mean reversion trade back down. But overall macro view, I think that Tesla is a nice name to play upside week after week in most cases in this market. FCX. So this is another one. You can kind of see a similar chart to like PDD in some ways where you do just a big reversal back up to like prior levels from a few months ago. And FCX is a name that's very sensitive to the price of copper and the price of gold. And when China did announce their stimulus, you can really see that starting to move some of the commodity prices because China has historically been, a commodity consumer, a big commodity consumer. And so if China's trying to stimulate their economy and they're doing some things, then in theory, then some of the commodity prices, it makes sense to move with that. But again, we'll see if this is sustainable or if this is just, kind of a panic mean reversion up and then it stalls out into those prior levels and then starts to sink down. So FCX will be on watch for 2 scenarios. One, a mean reversion trade if we have some negative news out of China, if commodity prices drop and this follows. And this is usually a low implied volatility name. So you can get some cheap options on this, which is really nice for the style of trading that I do. But if the price of copper continues to go up, if China announces more stimulus and the price of gold and copper continue to run, then I would expect this to make some new highs. So plan for 2 scenarios. That's the theme with a lot of these names that I have on watch. I just want things that can move and things that I can observe the move on and that makes sense to me. So FCX is another name on watch. MSTR, Bitcoin is also one of those things that as global liquidity increases, you can have some nice runs in Bitcoin, and then you have these names that are kind of anchored to that. And so as Bitcoin runs higher, just like FCX with copper and gold, Bitcoin and, Bitcoin affects the price of things like MSTR and coin and things like that. So I'm looking for something that is clearly, pulling a sector move. So if Bitcoin continues to run, which I think it has a decent chance of, getting back over 70 and things. But I think that one thing that has held it back is the U.S. election coming up and some regulatory uncertainty. So we'll see if it can, break out before then or if it kind of waits until then. But I think that Master and Coin should, have some nice moves alongside that. So they'll be on watch for calls if Bitcoin is running. And then SMCI, we had big breaking news on this on, I don't remember what day it was, a couple days ago, but IU was all over that and we had the tape burst. And so what that is it's an alert in the room that Max has set up so that when a stock has a sudden change in volume, so it could be a huge sell order, a huge, a large amount of buying. Whenever that happens, the second it happens, it alerts the room that this name had a surge of volume. And that usually comes out a few seconds before even the news or, as the news is dropping. And so you had a DOJ probe on SMCI and immediately you had an SMCI tape burst and that alerted people that, hey, something's happening with this name. Now be on the lookout for a headline. And Judah had the headline out within a few seconds after that. And, time is of the essence with any kind of breaking news trade. And if people had puts on this, some of the options went 50x, 75x. And so just to have those few seconds that can really, give you that head start, while other people are still digging around trying to figure out what's going on, it's just a massive advantage and one of the many advantages of the tech in IU. So this will be on watch for basically news catalysts. So I think that SMCI has some kind of presentation or some kind of investor, reach out over the next week. And so we'll see if they have any comments on their 10K, any comments on the DOJ probe. And I think that this will be on watch basically just based on that headline. If they have good news, if they have the 10K, if they say the DOJ probe is just, procedure, kind of how like NVIDIA had something like that a couple of weeks ago, it turned out to be nothing. We'll see. It could have a huge, trade up on that. But if it's negative news, if they have, more delays in their 10K, then I would assume that this is just going to go down and chop into this prior range that it was trading at, before the big episodic pivot. So plan for two scenarios, very news driven, but I think that you could have, 100-point move in this based on some headlines. And so I will be watching out for that. So those are the basic names that I have on watch for the week. And again, we're just going to see what makes sense as the week unfolds. And that's pretty much what I have. So any comments on any of those watches, Dawson?
Yeah, the main comment I see, like the commonality between all those, is the anchor trade and then finding vehicles to trade off of them, which is what I like to do. Like my focus will be mostly on the China stuff, but you're also looking at Bitcoin to trade master and coin, and you're looking at copper and gold to trade FCX, I think is my main takeaway from stuff like that. For me, it's looking how the China headlines and the larger caps on the China side, how they react, and then trading the small caps as my vehicle off of that anchor trade.
Yeah, 100%. And for me, that's what helps me get a good read on things. You want things that are tightly correlated. And so if you're just watching a stock on its own, it's not correlated to anything. You're just judging it on its own action. And that is, it can be done if you can get a good read and basically follow the key variables that are leading to the moves up or down, whether that's volume, press release or something like that. But with like sector themes, it really helps to have, an anchor and a ship. So basically things that are closely correlated, because that way you can have confluence. So if FCX, if I'm looking for a mean reversion trade, but I know that it moves on the price of copper, if copper is making new highs, it doesn't make sense for me to mean revert or try a trade on this, because the key driving variable is still moving it higher. And it's the same with the China names. If China continues to announce stimulus after stimulus after stimulus, then that is correlated with the price of the Chinese equities rising. And so it would be a mistake to really try to fade that while you have the driving variable still in play until let's say you have stimulus announcements and the news stops moving it. So it kind of becomes decoupled, that correlation, and then you could think that the positioning becomes off. So yeah, totally agree. I love anchored trades, and it's just about finding closely correlated things or identifying what moves a stock, whatever that is, and then basing trades off of that. So Dawson, thank you for joining me. You had a ton of great watches. And then, like you said, maybe happy birthday to Stan coming up in the following week. Been a big inside joke for you guys. But and then we have Traders for Calls in a couple of weeks. So I'm excited to hang out and just catch up with everyone. So thanks for coming on, Scan.
Yeah, thanks for having me. We'll see you in the room next week and see you in Vegas in a couple weeks.
Absolutely. All right. Have a great week, everyone. Thank you for watching Sunday Scan. Be sure to check out other content put out by Investors Underground, including interviews, podcasts, educational material, and more. Thank you.